Morning, ladies and gentlemen. I'm Gloria Boydoku, your host for today's program. I have the pleasure to welcome you all to the 2025 edition of our annual tax and regulatory webinar. This annual event is designed to discuss what the key expectations are from a tax and regulatory perspective, and also to point out some of the key risk areas that businesses and investors should take note of in the year. With a change in government, there's both anticipation and curiosity of how the country's tax policy and regulatory framework will evolve under the new administration. However, Ghana has a medium-term revenue strategy, which is a 4-year plan to increase tax and non-tax revenue and to reform the country's tax system. The MTRS, which was published in September 2023 and covers a period for 2024 to 2027, is to guide tax policy changes over the period up to 2027. This is designed to align the country's revenue goals with its spending and development needs. The goal is to achieve a revenue to GDP ratio of about 18 to 20% by 2027. Also, the current government gave indication of some tax policies they intend to implement as part of our discussion today. We'll be looking at some of those policy indications of the government, as well as the MTRS and the potential impacts for taxpayers. From a regulatory point of view, we'll be focusing on the key regulatory changes that have come into force and what obligation these changes put on us. I would encourage full participation in the discussion today and subsequent events when we do share the invitation with you. To moderate today's session, we have two of our very own, John Kusi and Na Ayele, both with the tax and regulatory team here at Deloitte. I will encourage you all to participate. Thank you very much. John, over to you if you can hear me.
Thank you very much, Gloria, and good morning to you, ladies and gentlemen. Thank you very much for joining us for today's edition of our 2025 Tax and Regulatory Outlook webinar. But before we start the session, allow me to share a few housekeeping rules that will help guide us as we go through the session today. As you would notice, our microphones have been muted, and it is to ensure we have an uninterrupted session whilst we go through the discussion. But at any point in time, if you have any question, please feel free to drop the question in the Q&A chat box, and we'll do well to respond to it. For our audience on YouTube, you can also put your questions in the comment section, and then we'll do well to respond to them as well. The session is being recorded, and the recorded version will be available on YouTube, the Deloitte Ghana YouTube page, after the session. So you can visit our YouTube page, and you will get access to the recorded version once the session ends. As Gloria mentioned, my name is John Kusi, and I'll be your moderator for today's session. And I'm ably supported today by my colleague, Na Ayele Kome. Hi, Na. Good morning.
Hi, John. Good morning. Excited to be here.
Great. Okay. All right. So during today's session, broadly, what we'll be discussing would be what the key tax policies of government are, and this is from a tax perspective. As we have gleaned from the medium-term revenue strategy, the MTRS, as Gloria earlier referred to, and also some policy indications we have picked up from comments from people within the government as well. So the issue would be why focus on the MTRS as we refer to. If you would remember, so the MTRS was published somewhere in 2023, and it was part of the task that Ghana had to complete as part of the extended credit facility program with the IMF. As at now, we have not picked any indication from government that this program would be discontinued. And also, some of the policies government mentioned during the run-up to the elections, some of them also align to the policies we see in the MTRS. So that's the basis for the focus on the MTRS this morning and some of the policy indications we have picked up from people within government. Also, we know earlier this week, the president set up a 7-member National Economic Dialogue Planning Committee. The expectation is that once the committee comes out with their report, it would also influence policy and decision making going into this fiscal year. So to help us go through today's discussion, we have assembled a few people from Deloitte to walk us through the discussions. So allow me to introduce our panelists for today. So we have Gideon Ayew. Gideon is a partner here at Deloitte with the tax and regulatory services. Hi, Gideon. Good morning, and it's good to have you.
Hi, good morning, John, and
Good.
good morning, all the listeners.
Okay. All right. So we also have 3 of my other colleagues who are also with the tax and regulatory unit. We have Augustine Donko, who is an assistant manager. We have Roy Godwin Sen, who is a manager with the team as well. And we have Betty Ochre, who is also a manager with the team. Hello, good morning, guys, and welcome to the session.
Good morning. Good morning, John. Good morning, everyone. Thanks for having me.
All right. So we'll start off with the tax policies. So Gideon, from a broad tax policy perspective, what would you say we should expect?
Okay, thank you very much, John. Yeah, so quite a number. As you may be aware, tax is a legal or a matter of law. And for the laws to also be changed, it's also have to look at the is it geopolitical issues around and all those issues simmering at the background. And by this, the economics of any exemptions or reductions in taxes, as any business person would expect, you will have to look at the balance between that and the sustainability of it. We all remember, is it 8 years ago, and we did see some reductions, import duties, etc. But these were reversed a couple of years down the line because it was found out that they were not sustainable. So looking at it and looking at Ghana's sovereign debt issue situation, I would expect that the government would want to meet its electoral promises as made in its manifesto, but that at the same time they would have to balance that reduction against the sustainability and making sure that we wouldn't get ourselves into that situation that were a couple of years ago. So I would expect generally, I know we'll go into further details, but generally I would expect that government will meet or go according to there are some easy pickings or easy winnings that they can make, but then I wouldn't see it so much drastic. But then they generally are put into comments here what used to be termed as nuisance taxes. And some of the comments coming from the members of government, or for example, customs duties and numerous taxes, for example, I would expect some simplification around those areas.
Okay. Okay. All right, Gideon. Thank you. Thank you very much. So let's get into the other issues for discussion today. So from a direct tax perspective, one indication we pick from the MTRS is the intention to develop a simplified approach to implement the modified taxation scheme. So the modified taxation scheme has been codified in our law books, right? So let me come to you, Roy. What really is this modified taxation about, and what should taxpayers expect?
All right, thank you, John. So modified taxation simply is a tax regime created to simplify tax, compliance processes for qualifying taxpayers. And the coverage here is individuals. Individuals who meet certain qualification criteria are eligible to, apply all the concessions under the modified scheme. It basically simplifies compliance down from a reduced tax rate around 3%, which is applied on turnover. And one of the key qualification criteria is your revenue has to be within a certain band, currently set at 20,000 Ghana cedis up to a maximum of 500,000 Ghana cedis.
Okay.
So if you are an individual and you are into business and your revenue falls within this band, then you may be eligible to comply under the modified or simplified tax regime.
Okay. Okay, right. Thank you. So the expectation is that once there's full rollout of this scheme, then compliance for the individuals in business that fall within the scope of the modified taxation scheme would be relatively easier than what we currently have. Okay, all right. Thank you. So let me come back to you, Gideon. One other topical issue is when it comes to taxes is the issue of transfer pricing and intercompany loans and related interest. One other also issue is that for revenue administrations who do not have access to ready information on aggressive tax planning schemes, companies do adapt. One of the policy indications we pick from the MTRS is the need to strengthen the safeguards against profit shifting mechanisms, a general aggressive tax planning scheme. So for this policy, in your view, what could be the direction and how should taxpayers look out for some of these things?
Okay, thank you once again. I think with this as well, I'll take a step back, and it forms part. After COVID, most governments are looking for more revenue. Government's revenue in terms of taxation fell significantly, and with the heightened debt situations across the continent, you found out that the tax news or tax system is being tightened to ensure that the most revenue is generated from the economy. So generally, related party transactions have always come under more excess scrutiny. And so this is supposed to continue. And then you look at the various multilateral organizations and the help and assistance that they try to give to various tax authorities across the continent. This area usually comes up number one. Additionally, the African Tax Administrators Forum is also looking at tightening this area. So we expect that irrespective of the changes in the law, the enforcement itself around these areas would increase. So we expect to see more of the transfer pricing audits, more of audits underscoring a lot of these related party transactions. So whether it's royalties, it's management fees, or any of the transactions. So for example, if you are dealing with a related party and you are bringing in a lot of goods into the country, then this should also, you should expect that they'll be looking at this transaction value and making sure that the customs valuation that you are using is at the right rate, and making sure that you pay the right amount of duties on the products you bring in. Yeah, so generally we would expect that what has started a couple of years back in terms of the audits of related party transactions and a lot of the post-clearance audits that the customs division of the tax authority has been carrying out will continue in that vein. Yeah.
Okay. So and linked to this point, if I may also add, it's one indication in the MTRS where they suggest there will be an expansion of the activities of the transfer pricing unit and even the transfer pricing regulations to also cover SMEs. So for those whose businesses will fall within the category of SMEs, it's important to also take note of what the transfer pricing regulations are and what requirements and compliance obligations you would need to meet as a business. All right, so I'll go back to Roy. And Roy, so globally, one challenge on one issue revenue administrations have been facing is how to exact revenue from digital services provided by multinationals in the various jurisdictions. So most countries have found a way to exact revenue from what these companies are getting from their countries. But then in the MTRS, one point that was indicated was that there will be the development of a mechanism for increased taxation of cross-border digital services. So from where you sit, are there indications of what kind of angle Ghana would be going?
Thank you, John. So as you rightly indicated, globally, countries have found ways to exact their fair share of revenue from profits derived by multinationals operating, especially in the digital economy. Currently, the Organization for Economic Cooperation and Development, that's the OECD, has been at the forefront of designing rules that they believe would get multinationals to pay their fair share of taxes in jurisdictions where they source their profits.
Okay.
Beside this, we've seen across the tax landscape in various jurisdictions that countries tend to apply maybe discretionary rules. So you'll see some countries applying digital services tax, some countries also applying what is called the significant economic presence tax. Others also apply the so-called digital PE tax, all in the bid to tax, the profit of multinationals doing business in their countries who are non-residents. Ghana has sent indications through the medium-term revenue strategy that it's likely that we will be implementing the Pillar 2 rules. Okay. The Pillar 2 rules are a set of rules developed by the OECD that gets every multinational that operates across the globe to pay a minimum tax of 15%.
Okay.
So the indications that the policymakers have sent out through the MTRS is that we are likely to implement the Pillar 2 rules through domestic legislations. So it is something that businesses, especially multinationals who are non-residents in Ghana, but do derive significant revenue from Ghana, should be on the lookout for. They should keep this under constant review. And once the policymakers take that firm decision to implement the rules through domestic legislation, they take steps to apply accordingly.
Okay. Okay, right. Thank you for that information. So it is important we stay up to date when it comes to development of some of these tax policies locally, so we are able to comply accordingly. One other interesting tax issue which we've heard the current government say is the scrapping of the 10% tax on bet winnings and emissions levy. So these two were introduced last year by the previous government, but we've had the current government mentioned that they are going to scrap the two of them. So maybe I'll stay with you, Roy. Potentially, what would be the consequences of this decision on government revenue, and also especially our drive towards carbon neutrality in scrapping off the 10% bet winnings and then the emissions levy? What potentially could be the implications?
Okay, so 2 points. One is generally there will be a reduction in tax revenue, no matter how marginal it may be. So looking at the performance of these two tax handles, especially on the 10% bet winnings, this tax generally was introduced to get government some revenue from the gaming industry, which is on its growth or on a high growth. But looking at the distortion and all the all the issues that the general populace had with some of these taxes, it ended up being classified as nuisance. Now, whether it's a nuisance tax or not, the jury is out there, but we have looked at the numbers, and scrapping, especially the 10% bet winnings tax, we do not expect any significant impact on government revenue mobilization. Okay. And if you look at the indications that especially the new Minister of Finance made, there are other ways that government can quickly make up for any shortfall that this tax eliminations would bring about. Same for the emissions levy. This can be viewed in some ways as a setback to our drive towards carbon neutrality. But again, the argument is out there that there are other ways of, supporting our journey towards carbon neutrality without necessarily exacting taxes on the populace, which a lot of commentators agree with. So these two taxes we expect them to be scrapped. The indication is that as early as the next budget, we should be read between now and sometime by end of March or April. So businesses can expect, and individuals can expect, that these two taxes largely would be taken off in the short term.
Okay. So for me, one good thing I pick out from your point is the impact on government revenue, which you indicated might not be very significant, especially looking at the comments Gideon passed earlier around the need to mobilize revenue and the level of our public debt. So that then comes in as some good news. But one other policy we pick up from the government tax policies in the manifesto they presented was the exemption of individuals from payment of taxes on dividend. So maybe let me come to you, Gideon, on this one. What will be the implications once this policy is implemented?
Yeah, so it's I think for this one of the area that will need a bit more flesh in terms of how it's going to be implemented. Because currently, if you pay withholding tax of 8% when dividends are paid, when they're saying exemption individuals from taxes, does it mean at the withholding tax rate or only when you receive it? Because maybe they could say, well, no, it's not going to be subject to withholding tax. However, when the individuals receive it, they are going to add it to their annual income and then pay taxes on it as an investment income. So I think it's something that we'll need a bit more on. In terms of, I think the earlier comment I made that when we are looking at this exemptions or waivers or relief, and judging from past experience, making sure that these reductions are sustainable. Or the question we ask is, what's the impact or how many Ghanaians receive dividends from their companies? Maybe currently not much. If you look at the total revenue of government, how much of it is coming from individuals on their dividends? Maybe because the planning has not been available there. Maybe once they change the rules, individuals being economic agents would then also realign and say, hey, previously I owned company XYZ and I was taking management fees. Going forward, let me start taking dividends. So it's not clear now, but I think individuals can then make changes based on what the actual laws will say. In terms of its impact on government total revenue, I don't expect it to be that significant. It shouldn't really bring a hole into government's pockets.
Okay. So we would then wait for the next budget to see if this policy from the manifesto would be implemented once the budget comes out between now and April this year. And one other point that was in the manifesto, which aligns with the policy or the indications we had even from the media review from last year, was issue around the operationalization of the Independent Tax Appeals Board. So we've had ITAB, the board, which was commissioned in 2023, but the board is here to start sitting. The indication in the manifesto of the current government was to operationalize ITAB. So I'll stay with you on this one, Gideon. How do you foresee that operationalization affecting our tax dispute process?
It's quite critical since we've had this board in our books for some years now, right from the point where it was suggested to when it was actually effected. I think all taxpayers are looking towards it. It makes resolution of issues much easier. A lot of taxpayers do not want to resort to the court in the first instance. So everybody is looking forward towards this. I think when you look at the act which sets the board up, And looking at all the revocations of prior period appointments from the current government, I think a lot of people are worried that this might further delay their sitting or setup. I think the Minister of Finance has to recommend or set up persons on it, but I think they also have a fixed tenure. Is it 4 years or so? And so that's are we going to see some of these revocations of appointments being carried out to this board, or would they be allowed to sit? It's an independent body. Individuals there are not there in their own names. Most of them are there in the names of groups or institutions. And so, yes, for us, I think it looks likely there could be further delays for the board for them to start quickly sitting and resolving some of a lot of the disputes which are coming their way now.
Okay. Okay, thank you, Gideon. So it's a very important point for taxpayers to look out for, because within our tax dispute resolution process, once ITAB becomes operational, then if you have any appeal against any objection decision, taxpayers would have to go through ITAB before they go to the courts. Once you do not follow the due processes laid out in law, it could affect your chances when it comes to disputing tax decisions from the Revenue Authority. So one other point from the MTRS is the review of the tax exemption regime to promote transparency. So we've had the Exemptions Act, which was passed in 2022 to regulate our exemption regime. And subsequent to the passage of the Act, we've had the Ministry of Finance also publish some administrative guidelines on it, with this policy around reviewing the regime to promote transparency. So for this point, I'll go to Roy. So Roy, with this policy, what should taxpayers expect?
Thank you, John. So taxpayers should expect a lot more certainty around how Ghana administers its exemption regime. And that is very important for especially foreign direct investments. As an investor or as an existing business, you want to be sure what tax exemptions the government is ready to trade in return for what incentives.
Okay.
So taxpayers should expect that there would be a lot more clarity and certainty around how the government administers tax exemptions. Like you rightly indicated, the legislative framework has been established. There's an act, there are practice guidelines or administrative guidelines. What is yet to be brought to bear is the regulations. And
Yes.
From indications we picked up from the medium-term review, the 2024 medium-term review, budget review, we do know from that document that a draft has been prepared, which is undergoing stakeholder engagement or some level of stakeholder review. So businesses can expect that maybe sometime either this year or in the very near future. So once that comes on board, then we can say that the full legal and maybe regulatory framework for administering exemptions has been put in place, and that should provide some level of certainty and guidance for businesses who wish to do transactions with government and are looking forward to some tax exemptions.
Okay, thank you very much. And one point you mentioned in your narrative is the issue around certainty. And tax certainty, there's the school of thought that it aids in revenue mobilization. And when there are challenges with tax administration, it also hinders our effort to mobilize the needed revenue. And linked to that, one policy in the MTRS is the harmonization and standardization of the tax regime to improve tax administration. So let me stay with you on this one, Roy. What do you foresee happening when it comes to this particular policy?
Okay, so we do know. So this is one of the administrative reforms that we know the tax authority is on. So in recent times, the tax authority has dedicated significant resource to improving its processes and enhancing taxpayer experience. So right down from 2022 up until now, or sometime late 2021 through to this year, most of the processes, especially that has to do with filing obligations, payment obligations, and even tax credit certificates or tax clearance certificates processing, all of these have been digitalized just to improve taxpayer experience. Now, you did make the point that tax certainty has not just correlation, but it also has impact, positive impact on revenue mobilization. So what we are expecting the tax authority and the policymakers to do going forward is to dedicate more resources to enhancing their processes where technology has to be introduced. We expect them to introduce technology where capacity of people have to be built just to, enhance the service delivery from the administration point of view. We expect them to do that. And we have strong signals have been included in the MTRS and in even the policy considerations of the current government in their manifestos that they are looking to, build the capacity of the tax administration, cut away bureaucracies, reduce redundancies, and enhance efficiency, all in the bid to, increase tax revenue mobilization. So it's something that businesses can look forward to.
Okay. So with this, we expect that the taxpayer experience would then improve. So before we move on, let me just pick a few questions we have in our Q&A chat box. So this one is from Michael Sakiti. So maybe Gideon, if you can pick this. Do companies still have to pay the 30% before engaging the ITAP?
Yes, they do.
Okay. So once you pay the 30% at the point where you object to your tax decision, when you get to ITAP, so we know somewhere last year there were indication about fees that ITAP would be charging. So be on the lookout for that as well. There's one on how long can a tax credit certificate last? Roy, would you pick that?
Yes, sure. So generally, we have seen that the validity is a month or 30 days. That's the general validity period. But now, like I indicated, these processes have been automated. It's now a self-service process. So long as your compliance is up to date, you can always go into your taxpayers portal and process a tax clearance certificates. As many as you want. So yes.
Okay. All right. Thank you. So maybe I'll pick the last one before we move on. This is from Ransford Kumsen. This on the dividend exemption point Gideon spoke to. Please, can emphasis be made on the individual's payment of dividend? I didn't understand the import of the explanation. So Gideon, if you can briefly take that again, then we can proceed to the other aspects of the discussion.
Yeah, so what you're saying is that currently you pay withholding tax at 8% when the company is paying dividends. So even before you received it, the company is supposed to have deducted the withholding tax before it gets to you. And so the comment was that this exemption of dividend from tax is not very clear. Is it that there are going to be 2 layers of taxes? Or is the exemption that's all that's going to be taken off, so that once it's exempted, you take it free and there's no more reporting or compliance requirement? That was what the comment was for. Yeah.
Thank you, Gideon. Then just one other brief one from Kwabena Appiah. Is there any act on the modified taxation scheme? So yes, Kwabena Appiah. So the modified taxation scheme is covered under our Income Tax Act. So our Income Tax Act makes provision that do cover the modified taxation scheme. So we'll move along and then we'll look at some of the indirect tax policy reforms that we have picked up. So, and the first one is on the alignment of the exemption and relief provisions in the Customs Act with the VAT Act. So the VAT classification for some products, so at the point of imports, some of these products are exempted from import VAT, while they are not specifically exempted from VAT when sold domestically. So there are indications that because of this misalignment, there are people who are motivated to rather import some of these products than to manufacture them locally because of that misalignment. So the intention around this policy is to align the provisions within these two acts, Customs Act linked to a harmonized system, and then our VAT Act, to ensure that there's consistency around how our exemption and our relief provisions are applied. And one other key policy is around the scrapping of the e-levy and COVID-19 levy. So this, I'll come to you, Gideon. Now, government has indicated they are going to scrap e-levy. There have also been indications that COVID-19 levy would be scrapped as well. What would be the implication of this for taxpayers?
Okay, thank you very much. I think it's still on the issue of sustainability of some of these scrappings. Yes, it's all businesses will welcome a reduction in taxes or scrapping of the e-levy and COVID-19. As everybody is quickly to point out, that we are the only country in the world still collecting COVID-19 levy, and that's why the fact that COVID-19 is over. But as far as government is concerned, they want the revenue. And
Okay.
so whichever name by which you call it, as long as it's incoming revenue to government, government will take it. And we've also committed ourselves under the IMF's extended credit facility that we are going to keep to a certain amount of deficit. So it's a function of two things, the revenue side and the expenditure side. So his government is saying, I'm foregoing revenue from e-levy and COVID-19 levy, then really something has got to give. Because if your revenue is going down and expenditure remains the same, then the commitment that you've given to the IMF that you are going to maintain a certain amount of deficit, you cannot meet it. So if this is done, either there is an alternative revenue source for government, or the government decides to reduce its expenditure. And usually in this part of our world, governments are never really interested in cutting the expenditure. That's on the side of government. However said, for most taxpayers, it's not just about the scrapping, but what these levies meant. You know,
Okay.
some time back, they were decoupled.
Yes.
So they were not, although in terms of taxes, they were treated as VAT. Whenever VAT is mentioned, these taxes were applicable. Because they were decoupled, businesses were facing a sort of an additional tax. You couldn't deduct it from your output VAT, and rather you have to take it through your CIT. And CIT is just a percentage. You're not getting the full deduction as the VAT rate would have allowed. So
That's right.
in terms of this, taxpayers will be looking towards this side. Is it a total scrapping of it, or are they going to be allowed to do the full set off? And in terms of how it applies, or will government take it off totally? If you look at the government expenditure reports that they issued last year, I think the two levies, they don't they don't cross more than 3% of total government revenue. So yes, government could
Okay.
reduce it, but 3% is still something. Are they going to cut related expenditure by 3%? Or these taxes will be reduced and then it finds its way through some other tax handle?
Okay. Okay. And one point you mentioned, which is around the decoupling, which is part of the policy indications we picked from the MTRS, is the potential decision to review the VAT registration threshold and the associated levies to even make them input tax deductible. So once the VAT system is re-looked at and we go back to the old system we had where the levies are then deductible, then eventually the expectation is that the cost to the final consumer should reduce, because once the businesses can claim input tax deduction for these levies, then they would not be passed on to the final consumers as we currently have. So we look to see the kind of decision government makes when it comes to the VAT regime and the associated levies, just as you mentioned. But one other point, which Gideon, you alluded to earlier, was around the cost of doing business at our ports. And in the run-up to the last election we had, both leading parties were strong around introducing policies that would reduce cost of doing business at our ports. So maybe I'll pick your thoughts, Roy, then Gideon can also share his views as well. What do you think are some of the policy indications government can implement when it comes to reducing cost of doing business at our ports?
Okay, thank you, John. So basically, like you rightly said, strong indications that the import-related costs would be looked at, and some efficiency brought into that sector. Businesses and individuals, for that matter, have had cause to complain about import-related costs, which directly feeds into the cost at which imported goods are sold in the market, and all of this have at some level impact on inflation, which is imported inflation. So government has indicated that they are keen on reviewing all the levies, duties, fees, charges, and taxes that are imposed on imported goods, linking that directly with the proposed waiver on vehicles and equipment for industrial and agricultural purposes. You could see the policy rationale that this is intended to reduce the cost of bringing in goods that are not readily manufactured here, and thereby cutting down the cost of doing business. And this feeds directly into the final purchase price that consumers have to give out to receive these goods and services. Which, if this is implemented well, we expect that imported inflation should reduce as a result, and the headline inflation should also follow suit. So this is a policy that we clearly look forward to. Hopefully in the coming budget, we would get some strong indications of how the government wishes to implement this, particularly with specific taxes or levies, charges or duties that they are going to review in this regard.
Okay. So Gideon, any thoughts or comments on that linked to the last point around import duty waiver on vehicles and equipment for industrial and agri purposes as well?
Yeah, a quick one. I think the main comment I want to make on that is that for both governments, I think they always mentioned the need to have a manufacturing base in Ghana. And if we want to really push that, then this is an area that we really need to improve upon. Of course, if you take our current harmonized code, there exists a certain amount of exemptions on customs duty for some intermediate goods brought in, but we need to push this a bit more, to a lot more. I think somewhere last year we saw that being applied to the sanitary pad producers. And so when this is spread across to a certain number of is it specialized industries or identified industry that we want as a nation to push forward, because they can provide more employment, and then they provide easier availability of goods on the market to avoid any supply chain disruptions. This is an area that we really have to look at, especially on the fees and the charges. And this usually boils up and it becomes very significant. And once that is done, it makes our local industries uncompetitive, and by the time their goods come out, they are not able to sell it. So we really need to have a look at the cost of inputs and how the fees, duties, and charges play an impact in raising the cost of goods up and making our local industries uncompetitive.
Okay. Thank you very much. So maybe before I bring in my colleague Nayeli, let's see if we can answer some of the questions in the chat box. So when should we expect the levies, COVID-19 and electronic, to be scrapped out finally? January, February, April? Yes, that's from an anonymous attendee. So we'd have to wait for the budget to be presented by the current government, which will give us an indication of how soon actions will be taken on these policy proposals. So we'd have to then wait, then we can pick that firm indication once the budget is read between now and April. Must I wait? This is from Prince Fifi Isel. So maybe Gideon, you can pick this. Must I wait for a GRA audit before I request for a tax credit for a period I over-assessed and overpaid my taxes? So if you can pick that.
Can you, sorry, I didn't get a question. Yeah.
So Prince is asking if he must wait for a GRA audit before he requests for a tax credit for a period that he overpaid taxes.
Well, there is nothing in the law which says so, but very often, once it's amount of tax credits, GRA wants to confirm or to be sure that really they do owe you a certain amount of money before they pay it back to you. And that really sometimes requires that they do a tax audit to confirm the amount. So it's not necessarily, but in practice, that's what happens.
Okay, thank you. So another attendee is asking, emphasizing on the cost of doing business, has there been a hint on reconsidering the increased rate on excise duty in the Excise Duty Amendment number 2 Act 2023 Act 1108? So there have not been any indications on that. So as I mentioned earlier, for this particular one, we then have to wait to see if government gives any policy direction around potential reductions in the budget that is to be read within the year. So I think we've answered most of the questions. So now let me bring in my colleague, Nayeli. So now from a regulatory perspective, what are we looking at generally?
Thank you, John. Good morning, everyone. Once again, I hope you can hear me loud and clear. From the regulatory perspective, we are looking at essentially all the new things that are happening in terms of the laws that we have now that would affect businesses going forward. We have selected a few industries that would be having such discussions on. The mining industry would look at some labor issues, would also look at some new changes in the financial sector, as well as all those things that may affect trade and foreign investment going forward. And to start with that discussion, in fact, the fundamental questions that we would be answering, that would be underlying most of the discussions around the regulatory side, how are these regulatory questions or issues going to impact businesses in Ghana going forward? And how can businesses strategically position themselves to make the most of the regulatory reforms that we expect to happen this year? In 2024, just by way of background, in 2024, the Ministry of Trade and Industry launched a business regulatory reform program that was meant to essentially provide a one-stop shop for all regulatory laws or new rules or instructions or directives that would affect businesses going forward. As part of the program, they introduced an interactive regulatory reform portal that had all the bills, the new bills, including things around labor, the new GIPC bill, and also provided an interactive kind of platform for policymakers to collect feedback, essentially do consultation with the general public. And to lead the regulatory reform discussions is my colleague in the person of Augustine Donko. He's an assistant manager with the regulatory team. Augustine, you're welcome. What do you think about this new regulatory reform agenda, spearheaded by the Ministry of Trade and Industry? They have a portal that is supposed to solicit views about, new laws and stuff like that. What are your thoughts?
Thank you. Now, so basically, the Ministry of Trade and Industry, trying to promote trade and investment within the country, introduced this regulatory reform portal, and it basically, so like you said, to coordinate activities of this investment issues that are of key interest to investors. Now, you can look at it from some perspective. You look at the fact that they would need a place they intend to create an economic zone, a special economic zone, where they can allow businesses that are ready. So in those places, the basic amenities and environment needed for some businesses to compete or trade from will be created. And therefore, if you are a business or an investor who intend to operate with certain conditions, it is an easy place to go and say, I'm just coming to operate here. And you basically will have the minimum level of infrastructure or whatever you need to operate being present. And as a ministry, they also took the lead in ensuring that certain or legal reforms that are needed to enhance businesses or operations of businesses are put in place. Like you mentioned, there's the need, they are actually basically leading the GIPC bill, the one that was late last year. But just to mention, it wasn't passed, which means that will have to be reintroduced again this year. There's still stakeholder engagement and all those. We'll look into the bill in detail later. But basically, it is just to look at some of those reforms. They also intended to create an occupational safety and health authority which to consolidate. When you look at it now, most of the industry players, so when you go to specialized industries, they have their own regulations and try to implement it. But they're looking at a one-stop shop and an authority of a sort that regulates occupational health and safety across board in the country. So basically, this is what we expect. We expect the engagement to continue this year, and we expect that at the end of within the year, something positive will come out of this series.
Yeah, it's interesting about especially the occupational safety bill. I think it would have a lot of impact for how industries or companies are structured in the country and, visions they have in place for ensuring the health and safety of their employees going forward. But let's start with the one regulator that affects all businesses, regardless of the industry you are in, which is the Office of the Registrar of Companies. We know in 2023, we had the companies regulations passed that essentially provides some legal backing to a lot of the administrative activities of the ORC, LI 2473. What, in your opinion, are some of the major items that every company should take note of or be aware of about this LI 2473?
Okay, so now basically they've been, as you may be aware, there are certain administrative processes that we all know that have been with the registrar. It's not a bit consistent. Sometimes you go and the positions are changing, and some of those administrative processes that they use in running the day-to-day affairs of their companies with regards to filings and amendments and all those things are not in the law. Some of them are not captured in the Companies Act. So people have only had issues with those things. What this regulation basically tries to do is to try to practicalize some of the requirements of the Act 992. So if you notice, they've picked certain basic information or certain basic areas where the Act did not address the practicality of implementation. So you can look at the need for filing of the beneficial owner detail. And also they've been talking about requests for information on details of beneficial owners of companies. There have been that concern that there should be some fine balance between disclosure and transparency and protection of personal information or data. Those engagement and stakeholder engagement happen a lot. And basically what the registrar and the regulation has tried to do is to outline some minimum and basic information that they can give out should people apply for it. And basically it will be for competent authorities who may need information on beneficial owners, individuals, and probably also law enforcement agencies. So they can apply and get those kind of basic information. Now, issues of non-compliance has also come up. In the past, the registrar has tried to dissolve or deregister some companies that were deemed as non-compliant. People will walk in and say your company does not exist again, and because you've been non-compliant for a while. As to what constitutes non-compliant and for how long you stand to be non-compliant before you are dissolved, those are not clearly indicated in the Act. What these regulations also sought to do is that they now made it clear if you do not file your annual returns for a period of 3 years consecutive years, you stand to be dissolved. So at that point, if you know you are non-compliant and 3 years you've not filed your returns yet, the registrar has the right to delete you or deregister you or dissolve you from the system. Of course, they use the means of dissolution without phone winding up, but what it just means that we also stay dissolved. And there are some other issues that the registrar also brought in. So maybe we can pick them as we go.
Yeah, I just want to pick your brain on the non-compliance issue that you spoke about, because I know they have done some reclassification of companies, for example, which is supposed to provide some relief, especially to small and medium scale companies. Can you explain a bit more of what the regulations has put in place for them in relation to compliance or non-compliance issues, especially for small and medium scale enterprises?
Yes, so the regulation has now classified businesses into 3 categories, like you rightly mentioned. We have the small businesses or small companies, and then medium, and then we also have large. Basically, they use the 2 criteria in ascertaining whether you are small or medium, the highest of the 2. So if you're a company with assets or revenue, whichever the highest, of up to 400,000 Ghana cedis, you are small. If you are above 400,000 and up to 10 million Ghana cedis, you are medium. And if you are above 10 million Ghana cedis, you are large. What this means is that for purposes of compliance, filing of annual returns, small companies are not required to file annual returns again. You are required, however, to write to the registrar and confirm that the information you have in the registry is accurate. And that is all you are required to do. You don't have to prepare your annual returns and have your audited financial statement attached and go there and go and file. You just have to notify them. Medium companies is also same. You are not required to file. There's also another leg they brought in with respect to preparation of audited financial statement. With regards to that audited financial statement, for small business, that one is only applicable to small businesses. You are not required again to do the full-blown audit of your account. They just expect some minimal level of audit review that can be once the account is prepared by your internal accountant or auditor. That will suffice. The auditor will just do a basic review of it and not have to comply with the full IFRS requirements. Yeah. So basically, there's some leeway in there for small businesses and to some extent the medium businesses as well.
Yeah, I think that comes as very good news to a lot of small scale and medium scale enterprises. It would be good to rehash the value categorizations again before we wrap up on the company's regulations. But it's good to hear that things like, filing annual returns every year and all of that, you are relieved from doing that. And all you need to do essentially is confirm that the information you have at the company's registry remains the same. And I want to believe that is in respect of the classification they've done for you. So if you are earning a little more, yeah, essentially you need to let them know so that you are moved into a different band. So thank you very much for explaining that to us. Let's look at some regulatory, industry-specific regulatory issues, right? Last year, I'm aware that the Bank of Ghana attempted to introduce a new directive regarding outsourcing contracts. And essentially in November 2024, if I'm not mistaken, the directive was finally issued, and it essentially seeks to provide some regulatory framework around how outsourcing arrangements between regulated financial institutions, which they call the RFIs, and third-party companies for various outsourced services are supposed to be run. So for our audience who are running in that space, who are operating in that space, listening to us, what do you think are some of the key highlights from this outsourcing directive that they need to take note of going forward?
Okay. So now basically the outsourcing requirement or directive that was issued by the BOG was supposed to actually come somewhere last year, July. However, there were some industry engagement and some industry players, following engagement with the industry players, that was a little bit a pushback or postponed. And then I think in November last year, 2024, that was now published. So that directive has been published. The effective date, the actual effective date of the implementation of this directive is 1st of July, 2025. However, the regulator, which is the Central Bank of Ghana, is aware of the fact that there may be some people currently having those. So there are rules around the transition period and all those things, which I believe we'll look into in soon. But what currently exists or what they've brought up is they have certain areas or categories that they've done. So to be able to go into this specific, you need a corporate governance. They have corporate governance requirements. Then they have the risk management issue that they expect you to comply with, and some minimal contractor arrangement they expect to see. When you go to the corporate governance, they want you to have an outsourcing policy in place, which is approved by the board of directors. And in addition to this, they also want you to have some, of course, basic level of materiality assessment policy. That is basically also to ensure that you have a policy to determine what kind of services you want to outsource. So that it doesn't become a case that you get up to there, you're outsourcing some services that are not required to be outsourced. So they have those requirements, what the board is supposed to be responsible for. The board can create a committee to be responsible for managing this, or the entire board can be responsible for managing this. They clearly indicate that this is just a transfer of obligation, but not accountability. So they still expect that the company and the board of the regulated financial institution will be very, very responsible and be the people to manage the whole process. So basically for the board level, you still be responsible and ensure that whether it is with respect to data protection, whether it is with respect to compliance issues, to ensure that the company can actually do the work, to also ensure that the company that you are outsourcing to have the right legal authorization or regulatory authorization to do the work. And whether the company is within Ghana or outside of Ghana, for which they'll have to go for certain other authorization from the BOG before that is outsourced. All those things are supposed to be the burden or within the responsibilities and duties of the board of directors and senior management. Now, with the risk management as well, outsourcing services, of course, to some extent will come with certain risk. So this risk is what they are basically considering. The board should be able to set out the right risk appetite levels that they are really ready to accept or to take. So these are some of the issues they are going to be looking out for. So then the question is, what are these risk issues that they should consider? You need to do some level of materiality test, right? If you outsource this service and there's a failure, what is the impact on the business? And are you able to have a backup system to be able to take that up? Will the impact be up to 24 hours for which you will not be able to operate? Is it a very core function that if you outsource, it basically means that you are outsourcing your responsibility or your core business activity to another person to undertake for you? So you have to do a lot of those assessments to be able to tell. Now, to determine whether or not you can even go into that service, when you have your risk assessment in place and the board has a policy also in place, you're able to tell what kind of services you should be able to outsource. Now, they have the core and then the non-core function. For the non-core, you do not necessarily have to go for some of those authorizations. And when it is also the core function which you can outsource and for which you need authorization, you have to be clear that it is not that which is very basic to your operations that you are outsourcing. And if it is the case, then you need to go for those approval before you are able to outsource. And when you go to the contractor arrangement, they expect that every of such an arrangement, whether it is within the group or you're outsourcing to your related entity or party or someone outside of Ghana or within Ghana, you clearly are able to have contracts. It should be written contracts. It cannot be as agreed between the parties. And in that, they expect to see the entire scope of the activities to be undertaken, whatever work it is that you want to undertake or you are outsourcing, you clearly list them over there. You also expect to clearly see the pricing model you are using and how much you are going to be paying to those people or to the service provider. And you also want to see that that service provider has the competence and everything that is required to actually execute that. So these are the basic contractual arrangements they also expect to see. They were to some extent not very strict with some of the services that they regard as not requiring approval. So if you are doing catering services, some level of company secretarial outsourcing, you are going to procure cleaning and all those kind of services. For those ones, they do not clearly need those kind of approval. Printing and repairs and maintenance, procurement of certain items like IT and those things, you don't require it. But once it is pure service, and one key thing that is also included is that you also need, where it is an outsourced service that is being outsourced to a company outside of Ghana or in a different jurisdiction, you need to assess and ascertain whether or not it qualifies as a technology transfer agreement. And when that qualification or that threshold is met from the GIPC perspective, then you also have to go for an additional approval or registration with the GIPC.
Yeah, and I mean, the directive also, just to add to that, what you said, the directive also has provisions on business continuity planning, data protection and confidentiality, particularly with regards to, if you're outsourcing core functions of the business, the requirement to ensure that all of these are put in place correctly as well. Just to remind our audience that we would give you the opportunity to ask all your questions. In fact, we see most of your questions coming in a Q&A, but we'll address all of them at the end of our session. But back to you, Augustine. You mentioned that the directive was going to be implemented from 1st July 2025. And so if I were a bank or a financial institution that already has an outsourcing contract, whether it's for core or non-core functions, are there any transitional provisions? Are there any things that I need to do now ahead of the July 2025?
Okay. Yes, of course. And I think the Bank of Ghana is well aware of this probably and knows that there are some banks or some regulated financial institutions. Just to mention that this directive applies to regulated financial institutions. So once this applies to you, they know that there might be some institutions already having this, and they have provided for that. The first level of check is for you to ensure that within 3 months of coming to force of this, so after the publication not coming to force, after this was issued, you have to notify the Bank of Ghana of all the services that you've outsourced.
So let's take that again.
Yeah.
So it is within the first 3 months of the publication. And the publication was done in November 2024. So
Exactly.
between November, December, January. So essentially you have to the end of this week or February to ensure that you notify the Bank of Ghana. Okay.
Exactly.
Okay. Yeah.
Yes. So you have to notify the Bank of Ghana of all services you've outsourced. They have a template and what they expect to see in that. And then the second thing they also expect you to do within the 3 months is for you to review the outsource arrangement you have. Identify all the non-compliance you've seen in that relative to this directive. Now, identify all the non-compliance issues that are in there, and also outline the processes and the steps you intend to take to ensure that that is remedied. So this must be supplied or submitted to the BOG within 3 months, as you've already explained. Now, again, there's also, as I mentioned, the materiality framework, assessment framework. You need to have that in place and approved by the board. Now, that will have to be submitted to the BOG by 2nd of June. That is if you already have an outsource or you've already outsourced some services. By 2nd of June, you are required to, of course, go through, review this, and then have the materiality assessment framework. That framework is basically to identify the threshold you'll be using for outsourcing, what kind of services, and what are the requirements, and the risk frameworks and the recoveries you may have in place to also submit that framework to the BOG, Bank of Ghana, by the 2nd of June. Now, for those who also have the agreement already running, you are expected to also, before renewal or by 30th of June, this one is now 30th of June, you must ensure compliance. So if your renewal period will come for those already having the outsource arrangement, if your renewal period will be before the 30th of June, then at the time of renewal, you must comply with this directive. What does that mean? Simply means that you cannot just renew on your own now. If you are going to renew before the time, you have to submit to the BOG and ensure that all the issues addressed here, so from governance to data protection and all those issues are addressed so that you also are able to get approval. But if you are now going to if you are not going to renew, if you not be due for renewal before 30th of June, then latest 30th of June, you are supposed to renew that or to comply with this directive. What it means is that if your agreement is due for expiration in December or November, you cannot wait till that time before you then go to the BOG or approach the BOG. You have to go, you only have a grace period of up to 30th of June to be able to do that.
Okay. I mean, just in case you are, listening to all these things or guesting is talking about and wondering at all if it will even apply to you, the directive is outsourcing, the Bank of Ghana outsourcing directive that was published in 2024, and it applies to all banks in the country. So everybody that the Banks and Specialized Deposit Institutions Act applies to you. It does. This directive also applies to you. It also applies to development financial institutions, that is development finance institutions, development finance, financial holding companies as well. And all of these under the directive are being called regulated financial institutions. So this is just to give some background and definition so that as you're listening and you're following everything that has been going on so far on the directive, you understand whether you fall within that category or not. But let's move on to some other industries, particularly the mining and extractives industry. I know that the Minerals Commission publishes a procurement list, essentially to help promote local content and local participation in mining activities in the country, pursuant to the local content and local participation regulations of 2020. And in, I think it was 1st January this year, a new procurement list is now in effect. What do you think are some of the main highlights, for the key highlights for, say, a company that that is operating in this industry? What are the things in this year's procurement list that you think they need to take note of going forward?
Okay, so now as we discuss, or as we have on the screen, we want to look at it in two folds. First, the 5th edition, which was issued last year, 1st of January 2024, and then we'll also look at that of the 2025 procurement list. Now, this particular one is also very important because usually when the procurement list is issued, within that year, you are expected to adjust and then comply with it. The following year, when you go for renewal, which would have been due, renewal is due for Minerals Commission by the 1st of every year, your whatever permit is issued to you, especially for support services, are expired. So when you go for renewal, they would have then expected that you comply. So just a recap of what the 5th edition contains, so that before you approve the Mineral Commission, you are sure that you are in good standing, so that your application is not rejected. Now, the 5th edition came with some policies, and as you mentioned, it is about local content, trying to increase Ghanaian participation within the industry. So insurance and financial services, they expect that 60% of insurance and financial services companies that participate in the industry are 60% owned by Ghanaians, and the directors of that company should be 60% Ghanaians. When you also go to drilling is in two folds. We have the underground and then we have the surface. So when you go to the drilling for the surface, it is 100% Ghanaian. And when you come to the underground, for the 5th edition, it's supposed to be 40% Ghanaian. Now, there are also some specific services that have been reserved for Ghanaians. And in the past, we are aware some foreign companies were providing such services like assaying and the medical services. But due to this particular directive, they have to sort of either sell off or have to just close down and leave the country. So medical services, if you're a company operating medical services, the whole of 2024, you would have had to comply with that. And basically, so these are the main issues that came up with regards to the 5th edition. So
Okay.
maybe we can look at the 6th if this place is okay.
Yes, okay.
Okay, so with the 6th edition, there have been some improvements. So there have been additional areas, like I said, the contract mining surface, 100% Ghanaian, and for underground, it's already 40%, as we saw it over there. Now, when you come to owner mining, there is now a prohibition on mining companies to undertake their own mining activities. So they necessarily have to outsource this. And that then leads to the underground mining and also the surface mining. Because previously, if you are going to do the mining, there's no direct requirement that you cannot do the mining yourself. But now you cannot do the mining. They've clearly brought that out. And if you intend to do that, then what you have to do is to ensure that you outsource it. Once you outsource it,
Are there any so outsource to who? Let's try and break it down. So are there any
Okay.
requirements for who to outsource it to? And when we say mining operations, like you explained, we mean both the surface and the underground mining. So if I were a mining company, I got a mining concession, you are saying that the procurement list for this year is saying that I cannot operate the mine myself. I have to necessarily outsource, whether it's
Outsource.
underground or surface mining. Okay.
Yes, you just cannot do them.
Who can I outsource it to? Does it have to
So
be
then,
a Ghanaian company?
so then that is where you have to understand or do the examination of what kind of mining activity do you require. If it's the surface mining, then obviously the company must be 100% Ghanaian and the directorship of the company must also be 100% Ghanaian. If it is underground mining, then of course, then you have to, we've already given the threshold of 40%. Then you have to make sure that the company you are outsourcing to actually has made this threshold of having Ghanaian participation, a minimum of 40% in there. Now, in addition to this, there have been further services that have been reserved for Ghanaians, or mining activities that have been reserved for Ghanaians. In addition to what we looked at already at the 5th edition, the 2024 edition, plant installation activities, all activities related to plant installation, cable bolts, and also steel supply. All these are additional activities that are reserved for Ghanaians. What it means is that if you are a foreign company or your company has some sort of foreign participation in it, this year you have to take steps to ensure that you comply with this. They may actually reach out to you and ensure that you comply. If you are not even reach out, so you cannot renew your permit by next year, 1st January, because when your application is made, they will review this particular requirement and ensure that you meet the threshold before your application will be considered. So it is good that you take note of these very changes within the mining industries, and before you go in within the year to approach Minerals Commission for anything, you comply with this requirement.
Talk me through, Augustine. I mean, I know you work with a lot of mining companies in your experience here at Deloitte. Typically for a foreign investor who, for example, wants to get into this industry, has set up a company and all of that, this yearly procurement list thing, right? It seems to be shifting the goalposts every year, essentially. How do you think this would affect particularly foreign participation or foreign investment going forward? And even some of the local entities, how do you think they can take advantage of things like these that essentially happen every year to favor local participation as much as possible?
Okay. So for the local, let me take that one first. For the local, I think it's basically good news. If you're able to get access to have to be the only one to participate in an industry for specific service, what I understand is that then that is basically good news. But what it means for the local is that we must be ready to take advantage of this opportunity. We must have the right technology, the right skills, and the right resources to be able to take advantage of it. Knowing Minerals Commission very well, you wouldn't just go there and get the approval simply because you are local. You'll still be subject to the rigorous requirement of ensuring that you actually have the capacity to execute what you intend to do. It is not merely because those services or these services are reserved for Ghanaians. Any Ghanaian that approve them, they will give the license. They are really going to be rigorous with that. Another issue for foreign investment, I clearly get that concern a lot, and we've really been getting those concerns that we don't even know how to plan. Now, what it just means is that if as a consultant, if you look at some of these services, you clearly will see areas that they are pushing for local content more. And if I look at this, I will expect that even next year, some of the supplies and procurement services are going to be added to the activities solely reserved for Ghanaians. Another issue I also foresee that when you look at underground mining, if it is not increased next year, I expect that in the next 2 years or so, the percentage from 40% will be increased further. So it is also very good to engage either before you come in, you engage either a consultant to advise on which areas you should consider and which area they expect that those areas could probably be activities of local content in the near future, or also engage the Minerals Commission themselves. They have a fair idea what they want to achieve and the target they have for themselves over the period. So that will give you a fair idea of which areas to be. But unfortunately, if you're already in the market, it is also good to start preparing, because it's just a matter of time before it gets to those thresholds where you may not be able to participate again or do the services for which you came to Ghana.
So as a foreign investor, you want to keep an eye out for the procurement list every year. Also, as a local person engaged in mining, you want to be strategically positioning yourself to take advantage. Let's move on to this other topic that seems to be trending recently, agribusiness, right? There has been a lot of talk about it. It seems to be emerging in our part of the world, although it's, it's being practiced elsewhere to its fullest. This year, we saw our new president appoint an advisor for particularly accelerated export. And we've also seen agribusiness being added to the Ministry of Trade and Industry for the first time. Hitherto, it wasn't part. Well, what do you think this means for businesses operating in that sector, or someone who is looking forward to engage in this whole agribusiness sector? And what are some of the challenges you foresee regarding this agenda to accelerate our exports of agro products in the country?
Let me take this a step back. We can start this conversation from the manifesto, actually. It didn't come as a surprise to many when you look at the appointment. And of course, from appointment, you could fairly tell where the government intends to go if you also have an idea about the manifesto. So clearly in their manifesto, they outline areas of concern. And when it came to agriculture, they were more heavy on agribusiness. So the processing, they should be value addition, and they should also be export orientation within the country. That is just to make sure that they also expand the economy. And when you look at some of the arrangement they've made, the concentration that incentives must be provided for companies that intend to go into agro processing. So if you're a company or an investor who is already in the industry or probably thinking of going into that industry, this may just probably be the right place, because if the government has clearly created, in addition to the Ministry of Trade and Industry, some agro-business unit, and also probably with the presidency, there's an advisor for 24-hour economy and accelerated export development, then clearly means that this is something from the manifesto they intend to implement. They could, however, be challenges like you mentioned. Those key among them where we usually hear the investors complaining about would be the land tenure system. So if you take an industry or probably a product like cassava, where somebody intends to process cassava into starch, the quantity of acres of land that person will require to be able to set up a cassava processing factory will be quite huge. The question is, when that person goes to identify a land, is able to acquire the land in thousands of acres? The answer is probably no, because that land wouldn't be owned by just one person. What it therefore means is that you may not be able to get in one place where I can set up my cassava processing factory and be able to own land to the quantity I need. What basically would happen, that we've seen that happen in the past, where government itself has certain lands or assisted in acquiring some acres or some huge acres of lands, and then subsequently sublease or assign those interests to, or giving those lands to some investors that come to agro processing to do. The government might probably want to consider those things now to be able to push this drive forward, because push for agro business without agro processing, without the raw materials to feed those companies or the industry. I don't see probably how that is going to work. Now, there's also issue of compliance and export, picking export as related development specifically. You know, you may comply with the local regulations, but the issue is that if it's about export, it's about the destination of those goods. And therefore, the basic market, one of the main markets that Ghanaians will export to will be EU. If it is EU, then there are rigorous requirements with regards to some of the products we export to those areas. They must be intentional. We must be intentional, probably at the state level, to ensure that the product that leaves Ghanaian shore to some of these foreign markets comply with their standard and those international standards. What I always say is that if you're able to comply with EU, you are most likely to comply with a lot of other jurisdictions, especially in Africa. You could comply with a lot of them as well. So these are the few challenges we see, but of course, with the state support and this intentional approach of agro-business, I'm very positive that maybe they are going to consider this issue to help the investors navigate through.
Yeah, let's hope that we are able to implement this as well as we possibly can, and particularly regarding the EU regulations. I know some time back we had some issues with that where some of our products were banned for a while, and let's hope that this time we are able to do better. I'll quickly brush through some of the new major laws that would affect some of particularly trade and industry and also labor. The GIPC bill that is going to amend quite a bit of what we have in the current GIPC Act. Particularly notable amongst them is, for example, the introduction of an offense of fronting. So if you came, for example, as a foreign contractor or investor, and then you had a local person essentially fronting for you, under this new bill, it may, if it's passed, as we currently have it drafted, then it's going to be an offense to do that. Another notable issue would be the elimination of activities that are reserved hitherto for just Ghanaian companies. And I know that is a very controversial and sensitive topic, but again, the bill has not yet been passed. There has been a lot of stakeholder consultation and opinions that have been given about the bill. Let's see what the government going forward would do, if we would see any amendments before it is passed. Another notable bill that may be passed would be the labor bill. Notably amongst that one too, the new provisions to be introduced are extensions of maternity leave by about 14 weeks, if I'm not mistaken, and also an introduction of paternity leave. I'll take us back to the manifesto as well, which made some promises around policies around assisted reproductive development also. So we may likely see provisions on surrogacy and IVFs and all these emerging trends regarding reproductive health and all of that. And the labor bill as well also has quite a number of interesting provisions there. Again, it's not been passed yet. Let's see if any of these new provisions would be implemented if the bill is passed. So just to recap a bit of what we said on the regulatory side, we said that we have a new companies regulation. One of the major things under that is to essentially provide some relief for small and medium scale enterprises who may not be able to file their annual returns every year, provides them some relief from that. The only requirement essentially is to ensure that your information at the company's registry is accurate year on year. There's a new Bank of Ghana directive on outsourcing documents, which would take effect from 1st July 2025. On the mining front as well, the latest procurement list, which was published January this year from the Minerals Commission, is prohibiting mining companies from doing their own mining operations. So you may want to keep that in mind if you want to go into that industry. And we've also quickly highlighted the GIPC bill and the labor bill. So in a nutshell, these are some of the major highlights from the regulatory front. I would hand over back to John to take us through a bit more from the tax perspective. John, over to you.
All right, thank you. Thank you very much, Nine Augustine, for that insightful discussion. So I'm sure our participants are taking note of the key regulatory issues you have raised. I'm going into this year, and then they will do well where there are compliance obligations placed on them. They will do well to fulfill those obligations. Let me quickly bring in Betty. So Betty, um, we know that the TUC, the Trade Union Congress, they indicated they are yet to engage government on the 2025 minimum wage for workers. But let me ask, while that engagement is yet to happen, as far as taxation of the income of employees and individuals is concerned, has there been any changes to the rates?
Okay, thank you very much, John, and good morning to everyone. Yeah, so with regards to the PAYE rate, there hasn't been any change, as John said, because the daily minimum wage has remained unchanged. And so, in effect, the PAYE rate remains the same as with last year. Yeah.
Okay, but then we are picking indication that there have been a revision to the SNET maximum insurable earnings. Can you tell us what this means?
Okay, yeah. So SNET, who is the manager of the Tier 1 pension scheme, has increased the maximum insurable earning. Right, so this is the maximum basic salary on which SNET accepts the 13.5 contributions. So what this means is that the amount going into Tier 1 has increased. Now, this would mostly affect the high income earners. So it's increased from 52,000 last year to 61,000 this year, effective January. So we are expecting SNET to formally issue a communication or a notice to that effect, but we understand they've already issued an internal memo and the SNET validation portal is already implemented to this effect. So as soon as that communication is issued, we would also issue a circular. Yeah, so this means that Tier 1 contributions will now increase to 8,235 from 7,020 Ghana cedis. The rest of the contributions that SNET is no longer taking, or what if you have a basic salary in excess of the 61,000, it means you would contribute that to Tier 2 in addition to the usual 5% going in there.
Okay. So for me as an individual there, and I'm guessing that will be the question run on the minds of other participants. How does this affect my pocket? Am I going to see a reduction in my take home because of this revision?
No, the contribution remains the same. It's the same 5.5 from employee, 13% from employer. This increment only affects the remittance aspects of the contribution. So more is now going into Tier 1 instead of Tier 2, with the expectation that upon retirement, the high income earners would receive more from their pension benefits as well as their monthly pension payments. So it wouldn't have any effect on the net pay amount.
Okay, that's some good news for taxpayers then. This revision, the expectation that it shouldn't affect how much we take home. Okay. Then one other phenomenon which we've seen in recent times is business undertaking some restructuring activities. And one key issue that mostly arise out of restructuring will be issues around redundancy. For a company considering to undertake any restructuring activities that could potentially result in redundancy, what are some of the issues they should take note of from a tax perspective?
Okay, so yes, when an individual is laid off, some payments are made to them as severance packages and whatnot. Now, the GRA is concerned because of most of the time the huge amounts that are involved. And I mean, all employees would really like to indicate that these incomes are supposed to be exempt because redundancy pay is exempt from tax. However, when you go into the Labor Act, Section 65, it mentions some key areas or key scenarios or situations that qualify under severance or redundancy. And so if these particular events occur, be it an amalgamation, restructuring, a merger, or any such arrangements that causes the employment of the individuals to be terminated or severed, then this particular termination would fall under redundancy. And hence, any payments made to the employees would now be exempt from tax. And so what we are requiring or requesting the companies or the finance managers to take note of is to ensure that whatever situation is causing this termination falls under the provisions of the Labor Act, and then also to secure professional advice if ever there's any doubt as to whether some payments constitute as exempt income from tax, and in order to do the correct thing in terms of tax treatment of these incomes.
Okay, Betty, thank you. So we'll keep an eye on that provision in the tax law and the Labor Act as you referred to in your delivery. And maybe one final one from me for you, Betty. So for individuals, the general notion is that once my employer did that tax from my salary and they pay it to GRA, I have fulfilled all righteousness when it comes to taxes. But I understand there are other filing obligations individuals have. Can you shed more light on that?
Yes, John, thank you. Yeah, so we have the personal income tax return filing obligation, which mandates every individual to file their tax return by the end of April of the subsequent year. And so tax return for 2024 will be due 30th April 2025. Now, it requires you to report all your income, employment, business, investment, everything. File it on the return. Like John said, it's not a new directive. It has always been the case. However, this has become more of a mandate because a lot of transactions now require tax clearance certificates. And before you can get the tax clearance certificate, you need to have filed your tax return every year. And then in addition to that, over the past year or so, we've noticed the GRA, in a bid to drive their revenue, targeting high net worth individuals or expatriates, and requesting them to file returns reporting all their incomes from worldwide, from offshore, all their earnings, interest, dividends from all other sources, and report it in Ghana. Now, this requirement again isn't new because for resident individuals, and when I talk about resident individuals, a Ghanaian is resident unless he or she stays outside of the country for the whole year. And so
Okay.
technically they're just residents. And for an expatriate to be a resident for tax purposes, they should have also spent more than 183 days in aggregate. Now, what this means is that you are required to report your worldwide income in Ghana, regardless of where the payment is being made, regardless of where it's coming from. So file your personal income tax return and report all these incomes. Like I said, the GRA is targeting the high net worth individuals for them to report all of these offshore earnings in Ghana, right, for it to be subjected to tax. Now, it doesn't also necessarily mean you would pay additional tax where there would be double taxation, right? Because for resident individuals, we have the room to utilize foreign tax credits, which is a certificate or kind of evidence of taxes paid on these same incomes in whichever country they are being sourced for, right? So you have to report. It doesn't necessarily create additional tax liability for you. All you have to do is report it in Ghana, right? And so that is what we are trying to drive more attention to because it's a key risk area for the expatriates who mostly tend to concentrate only on their employment income, right?
Okay.
Yeah.
So maybe just two additional ones as a follow-up for me. So you make reference to the GRA targeting high net worth individuals. Is there a specified classification they are using to be able to identify who these high net worth individuals are? And then the second point would be, once I fall within that category and I have not fulfilled this obligation, is there any opportunity for me to get a waiver of the penal measures that would apply for my failure to comply?
Yes. So high net worth individuals, there is a threshold which is
Okay.
$1 million US.
Okay.
But in Ghana, aside this threshold, they are also looking at persons who have media exposure. Famous people, kind of, yes, people who have this internet exposure and all that. So maybe you would have heard of a few people receiving notices from the GRA to declare their incomes over the past couple of years. And then additionally, if you haven't been compliant with reporting your worldwide income, there is a program that is being rolled out by the GRA, which is the Special Voluntary Disclosure Program. Now, it's a platform where individuals are required to enroll or register and then report all their worldwide income. And when you do that, they waive off all the penalties, as John indicated. And so you are not liable to any of the penalties. You would pay the liability if there is any, but you wouldn't be required to pay any penalties on this.
Okay.
So we are just urging each and every one of us to take advantage of the SVDP program and then enroll on it and report your income as required and pay the necessary taxes on them.
Okay. Thank you very much for that information. And on a lighter note, once you mention media exposure, I'm guessing you'll be within the radar of the GRA because you're on the
Myself,
webinar.
come on.
Okay, thank you very much, Betty. So we'll look at other tax risk areas that we believe taxpayers should focus on within the 2025 calendar year. And the first point I would want to mention is the issue around the enrollment of VAT registered taxpayers onto the e-invoicing system. So for some time now, the GRA has been implementing the electronic VAT system because of the requirement for taxpayers to issue certified invoices from the GRA certified invoicing system. So in this current year, the expectation is that the GRA will reach out to more taxpayers and onboard them. So for businesses, we would recommend that you start planning for this. You might, if you have not gotten a call from the GRA yet, you might receive one soon for you to be rolled onto the EVAT system. The second issue which is linked to this point is the use of the GRA certified invoice as a basis for expense deductibility. So maybe I'll come back to you, Roy. So the GRA issued this administrative guideline sometime last year.
Yeah.
What is in this for taxpayers, and what should they be looking out for as it's linked to this particular guideline?
All right, thank you, John. So yes, this administrative guideline was published by the tax authority last year, basically mandating taxpayers to retain tax invoices or a tax invoice because during an audit or in preparation of their tax returns, a tax invoice has become a necessity in claiming deduction in CIT computation.
Okay.
There are a couple of schools of thought. There's one that says this would have to be introduced through legislation proper, and that the deductibility rules cannot be amended through guidelines. There's the other school of thought that believes that the Commissioner General is fully authorized to issue such a directive. We just want to say to the business community that the administrative guideline has been issued, and we expect that tax officers would apply it. So businesses, as much as possible, should take steps to always retain tax invoices to support their expenses so that during their tax computations, they are able to claim deductions for this. So it's something that we ask businesses to put on the front burner and always ensure that they obtain and retain tax invoices to support all their expenses when possible.
Okay. So thank you for that. And then one other point that taxpayers should take note of. So just as we've seen the GRA do in recent years, the expectation is that in this year we'd see a number of tax audits being conducted by the Ghana Revenue Authority as well in the bid to drive compliance and increase revenue. So for taxpayers, it is important to put your house in order. And if possible, you could conduct tax health checks to assess whether there are any compliance gaps, and you take the necessary steps to address those compliance gaps. You can reach out to your tax consultants to support you on this exercise, so you are always prepared when the GRA comes in looking for an audit. One other practice note the GRA issued last year was on application or obtaining treaty benefits, and the practice note provided guidance around how beneficiaries or residents of other contracting states to a treaty Ghana has can obtain benefit under those treaties. So maybe Roy, back to you briefly. What are the expectations if a resident of another treaty country wants to obtain treaty benefits?
Right. So for taxpayers that are into cross-border businesses, this is one of the reforms that the tax authority has introduced to bring or streamline the process of utilizing treaty benefits or tax concessionary rates that are available in tax treaties that Ghana has with other countries. So again, here as well, there's divergence in how the business community has received this directive. There's a school of thought that believes that tax treaties are, if you like, legislation on its own, so that the tax authority cannot use directives to, as it were, deny a beneficiary of what is contained therein. There's another school of thought that also believes that the commissioner is empowered to issue administrative guidelines on how benefits would be administered to those who deserve of it, to minimize the instances of abuse and avoidance. Be that as it may, this directive has been issued, and our stance is always that which reduces the potential for conflict with the tax authority.
Okay.
So we do encourage the business community to review the requirements in this directive and, as much as possible, take steps to comply. Where businesses believe that for one reason or the other they are not in a position to comply, we recommend that they take steps to have a conversation with the GRA to find a middle ground.
Okay. All right. Thank you. So let me bring Gideon back into this discussion around the levies on imported services. So we know last year there was a ruling from the court in a case between Scancom and the Commissioner General of the GRA, where the court gave an interpretation of how levies should be applied on imported services. So Gideon, if you can briefly share light on what the ruling of the court was, specifically with respect to this issue.
Okay, thank you very much. So it's one of those cases. So previously, if you check the law, imported service only applies if you don't use an imported service for a taxable supply. That's what the law had been throughout, and all taxpayers had been complying. But the issue or the problem came about when the decoupling was done. So taxpayers could say that, because the decoupling of the levies, that's the COVID-19 levy, NHIL, and Get Fund, was decoupled from the normal VAT, then it means that when I'm not charging VAT, then I shouldn't also charge these levies, and which is what most of the understanding, even within the industry, had been. But when you went to court, and the court in its own wisdom decided that no, even if the VAT was not going to apply, however, you are still supposed to charge the levies. And this was quite a shock. So for a lot of clients who have not been doing this, it became quite an issue. As it is now, I don't have the full details of whether this case has been appealed. But then, even if it had been appealed, it's still the law. So we have different types of law, whether explicitly passed by Parliament or on cases that have been decided by the courts. And so in this case, we have a case which has been decided. Until it's appealed or another superior court overturns it, it is the law, and taxpayers are supposed to obey and watch that space. So yes, that's the status of it as we speak.
Okay, thank you. So, and just to add to that, so we know the case is currently undergoing appeal. So we wait to hear what the court will say on that one as well. And with the final point, we want to draw attention to is the obligation to file return for those who are realizing assets and liabilities. And this obligation was introduced in the last amendment to the Income Tax Act that we had. So the message here is for businesses, for individuals. It is important that you do well to comply with your filing obligation once you realize any assets or liability, so you don't incur penalties for your failure to meet your filing obligation. So before we end, one important thing I would also want to draw your attention to is your 2025 tax and regulatory compliance calendar and how it will look for businesses. Okay, so for the various tax types and then the need to file returns, it is important that you take note of the strict deadlines that are applicable. Once we miss these deadlines, there are penalty implications. And one other point you should note, so for returns that have the deadline falling on a weekend, you take steps to comply and do the filing before the weekend so we don't incur penalties. At this stage, we would allow room for questions. So what we'll do is we'll take some of the questions we've received from participants in the chat box. If you have any question you would want to ask live, you could also raise your hand, and then we'll give you the opportunity to ask your questions. Okay, so we'll start off with questions we have received from YouTube. This question is from YouTube, and maybe Roy, you could help us answer that. So two questions. One is, what is the power of the Commissioner General to issue private or class rulings? And also, whether insurance companies are now required to register for VAT, and what the position of tax on insurance premiums is. So Roy, if you can take that.
Okay, thank you, John. So from the provisions in the Revenue Administration Act, a taxpayer or a group of taxpayers, in that case, a class request, can approach the Commissioner General to seek for his understanding or interpretation of a specific provision of tax laws that he administers or she administers. So the response to such a request is what is termed as a ruling. So the commissioner is authorized to, upon receipt of such a request, issue those rulings. There are specific rules that guide that regime. The rulings in the case of private or class are only applicable to the applicants because the rulings are given based on the facts and the circumstances as presented in the application. So that is one key condition that we always have to keep in mind. I know there's always the temptation to rely on rulings issued by the commissioner in different scenarios and try to pick the principles or the learnings and apply to another fact or circumstance. Those would have to be done carefully because given that you may not be the applicant, you are not fully clothed with what the request, the details were. So that is how the ruling regime works.
Okay.
With respect to, please go ahead.
No, please go on. Yeah, right,
okay.
Please go on.
The second question had to do with VAT applicability on insurance, the insurance sector. So yes, there was an amendment to the VAT legislation, I believe last year, that now requires insurance premiums to be subject to VAT, i.e. insurance premiums are now, or insurance is now a taxable supply. I believe the restriction here is on general insurance rather than life insurance. So as going into this year, as businesses, we should expect that all the general insurance policies that we have, so talk of fire risk, any other contingency that is covered, these general insurance policies, the premiums that the insurance companies or the insurers would be charging would attract VAT at the standard rates, which effectively works out to 21.9%. Businesses who are charged this VAT on their general insurance premium are eligible, subject to the deductions rule, to claim input deductions for this, for the VAT paid on the premium. So that is the amendment that was introduced sometime last year with respect to insurance premium.
Okay, thank you, Roy. So maybe one quick one from for Gideon, then now Ayeli can come in if there are specific questions that they would have to pick. So this one was on the exemption for small businesses when it comes to the preparation of audited financial statement, and the question was how that would play out when it comes to filing of returns with the GRA. So Gideon, if you can pick that for us, the exemption by the ORC for small companies when it comes to audited financial statement against filing of tax returns, whether that exemption will still apply for that purpose as well.
Okay, thank you. I think I can make a general comment that this is supposed, for me, it's supposed to form part of government's ease of doing business. And for it's laudable that the ORC has come out with such a recommendation or such a rule. Because for the smaller size entities, it becomes a bit onerous for them to fully comply. On the side of the GRA, I expect GRA to also, in a like manner, accept it. I don't want to go into details of what the law says or not says, but I think in the general spirit of encouraging compliance and reducing the compliance burdens on smaller size entities, I think this is in the right direction. And my expectation is that for entities identified as such, GRA would allow them to also use the ORC's guidelines and follow suit so that they can do it. That otherwise, the whole purpose of ORC doing that will be defeated. And so the Ministry of Finance, as a superior or main governing or main ministry for the GRA, should likewise follow suit and make sure that the GRA would allow such entities to file those returns without the need of audited financial statements.
Okay, thank you. Any questions you picked up from your side now?
Yes, John, we have a question here. There's another question on the procurement list that we'll go to Augustine later. But there's a question here on from Benedict Baidu. He's asking what incentives are available for entrepreneurs venturing into the agribusiness. Benedict, we have just had a presidential advisor appointed, and we've only seen agribusiness being added to the Ministry of Trade and Industry. So actually, in terms of the actual policies or incentives that will be rolled out, would have to see the policies that will be put in place, particularly by the ministry, and also obviously what the presidential advisor would come up with. So these are some of the things that we'll be looking out for going forward. There are no clear incentives yet. There are no policy documents yet around agribusiness. And so would need to wait and see what the government does going forward. There was another question on the procurement list. Just give me a sec. Let me scroll through. I would address that to Augustine, if Augustine could help us to answer that. It was from, okay, there's an anonymous attendee. Augustine, the person is asking, how do these procurement restrictions, particularly on the prohibition of owner mining, impact Ghanaian-owned mining entities? And what are the safeguards to mitigate the risk of monopoly? Augustine, if you could help us with that question.
Okay, so now to pick the monopoly part of it, I think rather if you look at it from the perspective that they are trying to ensure that those mining services or contract mining are outsourced, the expectation is that it will open up for competitive bidding. More companies could now bid because already in the system, we sort of have a couple of companies that are into underground mining and surface mining already. So we do not expect a monopoly unless there is that general expectation that there are some companies that could be favored, which of course we are not aware of. But we rather expect that it will rather increase the competition within the industry. So basically that's the monopoly part. I don't know if there's another.
Yes, there's another question from Nicholas Adu Darko. For the sake of time, we'll just keep it to 1 or 2 additional questions. He's asking, does the directive from the Registrar General waiving the requirements for audited accounts for SMEs have a retrospective effect, or does it apply only from 2025 onwards? Nicholas, it applies only from 2025 onwards. The laws we have are prospective in nature. There has been nothing speaking to retrospective effect, particularly on the regulations. So if you're an SME, these regulations apply to you from 2025 onwards. All right, so they are prospective in nature. Okay. I believe we have yet another question. Okay. There's another question here also on PAYE and SNIT. It says, I'm not sure who the person asking the question is, but it says, are we to pay PAYE and SNIT for contract staff or employees who are engaged for a period of 3 to 6 months or 1 year maximum? I believe Betty could help us with this, or if Roy or Gideon and any of the others could take it. The question is, we required to pay PAYE for contract staff or employees who are engaged for a period of 3 to 6 months or a year maximum? Betty.
Okay, so we first need to identify what category of workers these fall under, whether they are casual workers or temporary workers or part-time workers. And each of these have their respective applicable tax rates. So for casual workers, they are subject to tax at 5%, whereas temporary workers are taxed using the graduated rates, just as a normal permanent employee would be. And then for the part-time workers, they are taxed at 10% if they are resident individuals, and then 25% for non-residents. For SNITs, for 1 year contract staff, SNITs is required to be contributed for the employees as well.
Okay. I see quite a number of us asking about whether the slides will be made available. As John mentioned earlier, we are recording the session. The recording would be made available to you after the session. So I think that's pretty much it. Unfortunately, for the sake of time, we will not be able to address most of the other questions that we have. So we'll have to end it here for now. But let's keep the conversation going. Once we send you the recording, if you have any particular questions you would like the team to address, you can easily shoot that question to us and we'll address them for you. But for now, I just want to draw your attention to the Deloitte School of Tax calendar. We have a number of sessions that have been planned for the year. For the first quarter between January this year and by March, we'll be doing a corporate income tax masterclass that is going to be from the 4th to 5th March 2025. In the second quarter as well, we'll look at some managing employee tax, income tax compliance issues. We'll have a tax workshop for nonprofit organizations. Quarter 3, my team, the regulatory team as well, would be doing a training on corporate governance. You would want to be there for that. And quarter 4 would have something briefly on navigating customs and excise duty obligations. Again, this will be shared with you. This calendar will be shared with you. So you'd want to keep an eye out for that and book ahead of time, register ahead of time if you get the opportunity to do so. All too soon, we have come to the end of what I believe has been an insightful webinar. Today's discussion has provided us, I believe, with deeper insight and understanding of the tax and regulatory landscape in Ghana and its implications for businesses. As much as possible, I think we have tried to touch on as many sectors as we could. Very special thank you to our able panelists, Betty Ochre, Roy Godwinson, Gideon Ayiowu, and Augustine Donko. Thank you for your expertise and valuable contributions To our participants, thank you so much for your engagement. We've had so many questions. Unfortunately, we will not be able to address all of them, but your questions have certainly enriched the discussions, and your active involvement makes us believe that these webinars are being impactful. So thank you so much for that. As we move forward, as mentioned earlier, let's keep the momentum, let's keep the discussions alive. We'll be in touch with you to share the recording as well as the dates you need to note for subsequent sessions as we go on. Thank you all once again for being part of this important conversation. Lest I forget, let me say a special thank you to my co-moderator, John Kusi. You have navigated this so well. Let's continue to work together to shape the business environment together. Have a great day, everyone, and I look forward to connecting with you again during our next session. Goodbye for now. Thank you. Bye-bye for now.